boots on the ground, putting it down, get up, get up. I got something to tell you. I don't think they want you to know, but I'm going to tell you anyway. It's five-time best-selling author Mickey D. I host The Scoop. I want to thank you for joining me. It's a pleasure. It's an honor to be on your electronic device, my friends. The Scoop is for your education, your entertainment, and your information only. Not a stockbroker, not a money manager, not a financial advisor. My friends, I'm an author. I'm a researcher. I put it in black and white for you in book form so you'll have it for days, weeks, months, and years to come. My friends, we can't sugarcoat what's going on right now. My friends, it was last weekend when I told you that the Dow, the S&P, and the NASDAQ were spending the weekend in a hotel together, the under 200-day moving average hotel together. And we'll take a look at the charts here in a minute, my friends. But that has continued, and it's continued with our stocks. And our stocks will not be breaking out while they're under this kind of pressure and they're under their 200-day moving averages. My friends, it wasn't hasn't been a good week of trading. If you're long, like we are with like our uranium stocks, you've got stocks that are off 20% or so off their yearly averages. Things are going down. They're not going up, my friends. That's just the way it is right now. Some stocks are double digit off their high. We'll talk about a few of them here in a second. I want to thank Angela. Thank you, Reg, for weighing in. My friends, we do have a new trade going on right now. Check, you private Scoop team members, check your mailbox there. And if anything, guys, I want you to be able to do this and get this information, get this book, and you don't have to read it right now. It's a very, very short book, and I should be getting a phone call here. It's been my trademark. But anyway, it's very short. I want you to at least just thumb through it and go to the back. You know what? All of the books that I have out there that the company has, all of those books, at the end of those books, there are the stocks, the companies and stuff. Put those companies on your watch list. That's what you do, my friends. Just put those on your watch list. I don't even care. You don't even have to read the book. Most of you are my traders are advanced anyway, and I love all of you. You guys are way ahead of the game there. You're way ahead. So all you need really are the stocks, and we're very early in this trade. We're going to kick butt just like we did in other areas when we get in awfully early. There's a lot going on right now. My friends, a lot going on in the world. There might be a war, this, that, and the other thing. The Fed is in there. Interest rates, maybe going up. Things are happening. So there's nothing we can do about it, but things are going on right now. And all we can do is set ourselves up, and when these stocks go down super low, and like I said, we'll take a look at them here in the charts. When they go down super low, think of it as an opportunity. It's an opportunity to buy these stocks really low. That's the opportunity, my friends. So let's take a look here in a second here. But I did want to stress to my private students to take a look at your latest updates and handle your business. Handle your business. There's not a super homework assignment there. It's just a small homework assignment, and you take care of it. And I'll have I have an additional area that I'm keying on right now, and I'll be sending you guys out. Of course, I don't put it all in the, you'll have some additional information. My private students, I will be giving you some additional stuff here in the next days and weeks to come. But let's take a look at the charts. I just wanted you to get the picture of, as we look at the Qs, QQQ, 200-day moving average, it goes we're just free falling really, guys. It's going straight down, 200-day with the Qs. Maybe we'll have a bounce tomorrow. The Apple bounce, let's call it. Maybe Apple can do what back in the day, what Cisco used to do. We called it the Cisco market and the Cisco bounce. Carried the whole market. I'm not sure Apple can do that. We'll take a look at Apple. Let's take a look at the S&P 500 here. Same thing, guys. We're below the 200-day moving average. We're trapped inside that hotel, and we just may be there for a minute. Like I said, hopefully we bounce back up and then go over it in ensuing weeks and months to come, my friends. Hopefully we can do that. Take a look at the Dow. The diamonds here. Get this a little bit better for you here. Same thing with the diamonds. We're going sideways right now. That 200-day moving average right here, and the dividend there. We're going down. We're going down. There's no ifs, ands, or buts about it, my friends. Like I said, maybe Apple can do something. Who knows? Let's take a look at the. It's a big biter. It's not below its 200-day moving average right now. Apple, like I said, after hours, it did. It bounced back up, but how far is Apple going to be able to carry this market tomorrow and the days and weeks to come? I'm not sure it can carry some of these stocks that high. What about the North Shore Global Trust here, my friends? The CTF here, 200-day moving average. If you wanted to get in now at $60 USD, that is a good point for you. There, well below its 200-day moving average. If you want to wait for a catalyst, maybe a listing on the New York Stock Exchange, which will be coming. I don't even know if that's going to be enough once the momentum of this market heads down below its 200-day moving average and goes further and further and further. What about Cameco? Same thing. 200-day moving average. Cameco, boom, into the gutter, guys. These stocks that go below their 200-day moving average, what we can hope for is they come back and challenge their 200-day moving average. Now, like I told you, they went into this hotel in 2008, and roughly it took between seven. It was the middle of 2007, 8 or so. It took like 2 years, guys, to get back up over the 200-day moving average for the Dow, the S&P, and the Nasdaq. So it can happen fast and swift, and then it can camp out there. This is one of those situations where a lot of people are saying that, hey, it's camping out, and you've got companies like we're looking at Cameco. You got like Energy Fuels. You got companies here that are like 20% in January. They're year to date. They're like 20% down. You see 200-day moving average. You see Energy Fuels down. It's down in the regular session. It was down 4.7% today. Not looking good. It's not looking good for any of these companies. I was playing around. I picked up some Encore. Encore at under $1 USD right here. Heavy volume. I believe Encore has an opportunity to be a leader in America. My friends, as you know, it was one of our baby knockouts at under 25 cents. Zarga and Encore, both of those we singled out early. Our research took them to both of those at being potential double-digit stocks in a bull market, in a big uranium bull market. We expected both of them to go over $10. So we just traded basically 2 10s in for a 20. Get it right on Yahoo. Get it right. If you quote Mickey D, please get it right, okay? It's not the one. We didn't think that Encore would go to 20 early on. We thought Encore would go to 10. But now that Zarga is teamed up with Zarga and it's bought Zarga, we think that Encore could possibly go to 20. That's our long call the next 5 years, my friends. Denison Mines, baby knockout. Denison Mines is doing, like so many of them. Denison is down. Cameco, Next Gen, they're all down like double digits for from year to date. They're down double digits. So um, it doesn't look like there's a lot of uh, the stocks are going down. This is bearish all the way. A lot of volatility. I have little faith, and that's why I harped on the 200-day moving average. I have little faith of stocks bouncing back until they bounce back above their 200-day moving average. So, sure, you little pricks here and there, little pricklings, 50, 25 shares here and there, but we want you to really, when they're under 200-day moving average, really think about the baby knockout money management strategy there. Guys, we talk about a dinner and a restaurant and a movie for a family of four, and maybe a couple $100 or so, whatever it is in your area. It could be double that, or it could be less. But that's the general tune that we go by when we look at speculating on some of these stocks, especially when they're under their 200-day moving average. There's no need to jump on any of these stocks. And like I tell my private students, I'm telling you guys, even the stocks in the new book, put them on your watch list. Sure, they're all very low right now. They have a lot of potential, and the area we're in has a huge upside possibility, guys. So put these definitely on your list, and we'll take care of it from there. But that's what I want to get to you today. You guys check, once again, private students, you check your email. Love you. God bless you. Take care of you and your family. You guys have a blessed rest of the trading week, my friends. If I don't talk to you till the weekend, you have a great weekend. There's going to be a lot of good football during the weekend. I'll give you my picks on the next video. I'll give you my picks. And who does Mickey D think is going to win the Super Bowl? I'm right here in gambling capital. I'm right here in Nevada. I'm here. Not only am I here with all the mining companies, but I'm here with all the gamblers. Oh, you got to know when to hold them, know when to fold them. Somebody else wrote that. Anyway, my friends, I don't think I'm trying to sing somebody's song. It's their song. I mean, I've had enough guys stolen enough stuff from me back. Now, anyway, love you. God bless you. Take care of you and your family. Take care.